Peace, family, and welcome back to Discipline to Keys. I'm Keen Singh, and here tonight we have your latest market breakdown with fresh, verified data. Please keep in mind that this is educational content only and not financial advice. Please do your own independent research. Now, the US dollar is sliding, and gold is reaching new levels that some never thought they'd see in this lifetime. However, according to market benchmarks, the US dollar index, please keep in mind that the US dollar index is the most gauged greenback against a basket of global currencies. Is the most gauged, the most followed greenback against a basket of global currencies, has retreated to its lowest point in about 4 months. Now, this slide highlights real pressure on the dollar in the global forex markets. What is happening is traders are reassessing US policy and macro risk. Now, meanwhile, gold has officially broken the 5,000 per ounce level. And this has never happened in history. This is the first time in history we've seen gold reach such prices. Now, gold has pushed past 5,100 in the most recent trading days as investors move towards their hunt for safer assets. They are looking for safe haven assets to put their money into amid uncertainty. Now, how does this translate into everyday life? With the dollar sliding, it means that when you go to the store to buy something, you're going to feel like the cost of living has gone up. But in truth, what has happened is the dollar's value has gone up. So you're paying more for your dollar, you're paying more for your item. Now, what smart investors are doing when the dollar begins to lose value, they start parking their dollar into safe haven assets like gold because they want to preserve their wealth, they want to beat inflation. So they're taking a hedge against the dollar as it devalues. Now, across the world, we're seeing markets like the Japanese yen strengthen. And the Japanese yen is the one I'm choosing to mention today because it has strengthened noticeably. The Japanese yen is trading at 153 to 154 yen per dollar. Now, this is driven by speculation and not confirmation, but it's very noticeable how strong the Japanese yen is getting. Now, moving along. Analysts have pointed to heightened geopolitical risk. Now, we're all aware of what the 2026. Now, we're all aware about the geopolitical risk that's happening. 2026 opened with a bang. Geopolitical risk was at the top of the menu. Anyway, policy uncertainty in Washington is not making it any better. And there is a broad portfolio shift towards alternative assets. And these are all key drivers. You see, the dollar sell-off is very real. It is real. But it's at a medium term move. It's not yet confirmed as a multi-year collapse. So I want you to understand many of the most dramatic narratives that are circulating online have been exaggerated and it's speculative. However, gold's rally is suggesting to us that there's deep fear. There's real fear. Fear is the primary factor right now. But at the same time, the US stock indices remain firm. So they're showing an unusual divergence between equities and traditional safe havens. So I need you to keep an eye on the Federal Reserve's upcoming policy decision, keep an eye on the global trade developments, on the currency market flow, because all of these will continue. It will continue shaping the dollar and the commodity trend that we're going to see through 2026. And I need to understand that the dollar doesn't affect just those of us in the US, it affects you as well in the Caribbean. In Guyana, you are affected by what happens to the dollar because the dollar is the global reserve currency of the world. Now, that's your verified market snapshot. I'll continue to bring you real data and not hype.